Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the Dow Jones30 futures chart. But just before I start today's video, just want to start by saying a massive congratulations to everyone over in my Signal team. This is the Signal team, which of course I offer a free monthly trial, but today we close a buy position in the S&P 500 yielding 2.64%, two buy positions in the Nasdaq collectively yielding 2.92% and 0.82%. So don't forget guys, if you'd like to be part of this team, first month is free. All you have to do is scan this QR code. It will take you to my website where you can then sign up. But let's get started by looking at the markets. You know, I've been coming on here for the past couple of days and weeks saying that I did expect the market to bottom around 3,200. Albeit we did go as low as 4,100-ish, but we have now had a very strong rebound here in the S&P 500. And I have been saying for the past 3 or 4 months, as we've been working our way down here from those August highs, or I should say late July highs, that I do anticipate a end of year rally, and I think that this is the early innings of this playing out. Of course, November, historically speaking, is one of the strongest months of the year. We're only on the second day of November, and we are seeing some very sharp gains. I think that the S&P 500 will start to struggle here at the S&P at the 50-day EMA, which sits at around 4,300. I think that this is an area where we can potentially see us pause here. I think what's really important from a technical perspective is that we break above these area of resistance. Of course, this is a series of lower highs that we formed here for the S&P 500, and if tested, it will take us all the way up towards 4,400. So that's an area where I do expect us to trade up to, probably going into next week. But I wouldn't be surprised if, you know, the next couple of days we did see some sort of digestion. What's really important though going into tomorrow's session is Apple's earnings. Now, Apple, you know, very similar to the S&P 500. Obviously, it's the largest weighted stock. It's the largest company in the world with its market cap of well over $2 trillion. In fact, just shy of $3 trillion at some point back in July. But, you know, if we can break above this minor downtrend that we've been forming here in the Apple stock, this would be very crucial and beneficial for the major indices, especially the S&P 500, where we would likely see a move up towards 4,400 in the coming days. So that's definitely something I'm keeping my eye on as we go into the closing bell today. And then just quickly jumping over to Nasdaq100, very, very strong here. We've bounced off the 200-day EMA and the bottom of this downtrend, this down channel, I should say, that we've been trading in since late July, early August. We've now broken above the 50-day EMA, and a close there would have then largely indicate a move probably up towards, let's say, 15,100 in the days to come, where we go and test the top end. Again, similar to the S&P 500, a break above the top end of this trend would be significant for this market, and that would likely send it all the way up towards 16,000, which of course are the swing highs of this year. Moving over to the Dow Jones 30, very strong price movement. We've closed well above the August swing lows, and that just tells me that this market's going higher. I think this is going to be the price area where we're going to go and target, which is 34,000. A break above there, very similar to the Nasdaq. We will likely see that move up towards 56,000 to go and test the swing higher. So, you know, the market's setting up very nicely for what I had been largely anticipating and, of course, positioned for. Yesterday, I made $47,000. If I just quickly show you, there you go, $47,000 in one day, and that was by being well positioned, waiting for this, you know, very strong move in the stock market. And the good news is that I don't expect it to stop here. I do expect us to see some follow through. Is the market going to do this? No. Is it going to do this? Yes, most likely. I think that it's going to be very volatile, very choppy. I think we're still highly dependent on what this does for 10-year bond yields. A break of this trend would be very, very positive for the stock market. But many analysts that I follow are expecting a back test and a potential breach, just slightly and quickly above 5% before then crashing back down and officially breaking this trend. So if that was to occur, that would of course cause some choppiness over in the stock market. But ultimately, by year end, I do expect that prices can still be significantly higher than here, well above 4,400, probably within the 4,500 to 4,700 range. So I'd be a buyer. And that's going to wrap it up for today's video. Don't forget, if you'd like to join my Signal team, make sure you scan this QR code on your screen. It will take you to my website where you can sign up. Your first month is completely free of charge. And if you don't enjoy the service, you can cancel at any time throughout that month, and you will not be charged.